It's January 26th, real estate and mortgage rate update. Heading into the new year, what to expect with real estate values and mortgage rates. That's kind of the hot topic right now. Let's jump into the numbers and see what's going on right now. We're a little elevated over where we were just a couple weeks ago. So we were in the six, and there was some opportunity below six. But there's a lot of volatility in the market. I'll kind of show you how that plays out. I did put the 20% down on the median home price in Clackamas County. So you can see the mortgage payment for 30-year fixed, 15-year fixed. 30-year fixed, we're at 6.17 national average. That's as of today. And 15-year fixed, 5.75 national average. So again, moving in the wrong direction. Saw a tiny bit of improvement. But here is what is going on in that regard. As I've mentioned before, mortgage-backed securities drive rates. So what you see here is a real-time trading feed of mortgage-backed securities. The reality is that rates don't go up or down unless this goes up or down. Each of these bars are a day of trading. Green and up is good for rates. Red and down is bad for rates. You can see we took, we were kind of in the sixes right here. Six and slightly below. And now this is where we're at. We saw a little bit of recovery today. Just a lot of volatility in the economy in general, due in large part by the kind of more foreign involvement. And frankly, the current administration, anytime that there's like tariff threats or retaliatory types of things that are going on, it disrupts the market for sure. And that's where we see some of this volatility. So with this improvement here above this, what was a ceiling, now a floor, hopefully we can continue to move out in this direction. Just a quick week in review. The government did release delayed PCE, which is an inflation report covering October and November. The number mostly matched expectations, which is why we're still seeing some stability in rates. Basically 2.8% for both headline and core PCE, keeping that at the annual rate. Really where the Fed wants to be is at 2%. Fed Chair Jerome Powell said, there's no way to do this without some risk. It's either, risk for inflation or risk for unemployment. Keeping an eye on both. We've got later this week the Fed decision, I believe on Wednesday. So we keep an eye on that. And then on Friday, we have the producer price index, which is another inflation report. Housing, there's an article that I'll put in the body of the post, but their home sales fell from November to December almost 10%. And so some of that has to do with just time of the year. This is a slow time of year, but also some of that rate volatility. And so, but Q3 GDP came in the fastest growth in a short period of time since like Q3 of 23. So that's been really strong. And then initial jobless claims remain low, but the continuing claims remain high. There is some speculation that if people are getting laid off, they're turning to gig work and not filing for unemployment. So new claims are a bit on the lower end. So hopefully we can see employment stay steady and inflation come down. That will certainly play into mortgage rates coming down. So we'll keep an eye on this, both for the Wednesday release. If it surprises the market, I'll update and do a new update. And then again, Friday, we'll have another inflation report and we'll check in to see how that goes. Until then, we'll speak soon. Thanks.